Welcome everyone, this is Luis with Antonine Capital, your business loan brokerage, helping you either buy a business or grow the business you already have. In these series of videos, we've been diving into business financing with a focus on SBA loans. This here is week 3, day 2. Yesterday we talked about what constitutes a small business per the SBA standards. Today we're going to talk on credit requirements for both personal and business credit. For those of you that didn't know business have a credit score, you're about to soon find out on that. Now, credit matters for SBA loans just like it does for everything else. It's a measure of your personal financial responsibility and the health of your business, and really your ability and capacity to repay the loan that you're looking to take on. There are minimum credit scores. Let's talk about first on your personal credit requirements. There's 2 factors here. First one is your minimum credit score. Most of these are looking for really an average score or better. The better, obviously, the more likely you are to get a loan, or the lower your interest rate that you're going to get. But usually it's about 650 or higher. Some lenders go as low as 620, and some lenders and that we have relationships with don't even have a minimum score, right? They really look at the strength of the just financial performance of the business. They want to see cash flow intensive businesses, but that's getting a little ahead of ourselves. Let's just talk on just the minimum credit score. Yes, there are established minimum credit scores, but that is up to the lender, right? The better your score, the better rates, the more likelihood you are to get funded. But if you're in the mid 600s, you're doing okay. You should proceed. If you're lower than that, just make sure that work with us to really get an assessment and put forth a great package to the lenders to ensure that you could be lended. What are we looking for in those credit reports? Payment history. Want to make sure that you're making your payments on time, that you're not overextended with your debt. There are no derogatory marks. The 2 killers for anything on your personal credit, or really anything in your personal life, is if you're falling behind on your mortgage, or you're not making child support payments. Those, in my experience, have been really and now I'm talking just SBA, but those are deal killers. If you're unwilling to keep on top and pay those 2 bills, odds are pretty good you'll skip out on anything else, right? Or anything else is going to be much lower priority than those 2. So that's really the factors that we're looking on the personal side. Let's move on to the business side. So business credit requirements. So business do have credit scores. So once you have an established profile with Duns & Bradstreet, they provide a paydex score, which should be 80 or higher for a SBA loan. Again, it's up to the lender. The lender is going to assess the financial health of your business, and it's going to do those by looking at your financial statements. Now that includes the profits and loss statement, your balance sheet, and your cash flow reports, right? Those are the big 3, and that's something that we can help you kind of go through. You should be able to have those. This is one of the big stumbling blocks that I find with some businesses. They're usually not organized enough, especially the younger SBA business, small businesses. They haven't established their financial house yet, so they don't have P&L statements, balance sheets, and cash flow reports. But these are critical to have going in. Additionally, tax statements for the business usually factor into these. 1 or 2 years worth of statements. Some banks ask for the last 3 even, but that's really the big thing that helps banks or lenders, not just banks, assess the business's ability to repay debt. So one of the big things there is you want to make sure you establish business credit. Sign up with Duns & Bradstreet. Open accounts with vendors to establish credit for your business. Now, and that's through your entity, not yourself. You may have to secure that loan by your signature, but your business should be the one that's building its credit, so that you can get a line of credit, working capital loans, just to help establish some business credit for your business. Again, the red flags here are anything that for any of you that lend money to anyone else, it's, inconsistent financials, high debt to income ratio, unpaid tax liens, unpaid mortgages, unpaid child support. Those are going to be deal killers. So preparing for your SBA loan application, make sure you review your credit, both your business and your personal. Address those issues early. You want to clean those up as much as you can. You don't want to apply with a weak application if you've got things that you can address and the money is in dire for you to get right now. Go ahead and just clean all that stuff up first, then move on with the application. Make sure that your financial house is ordered as far as being able to report all that information by the different statements that I had mentioned. For tomorrow, we're going to talk on the importance of equity investments and collateral for SBA loans. Hope you really enjoyed this video. If you did, head over to our website, AntonineCapital.com. Sign up for our newsletter where you'll get these videos delivered to you on a monthly basis. If you have any questions at all on getting financing, be that SBA or otherwise, to grow your business, or you're interested in buying a business, please reach out to us. And I'd be look forward to hearing from you and seeing what we can do to help you help your business grow. So thank you, and we'll see you next time.